Warning. This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel, and things are looking pretty good as far as I can tell. Yesterday we got the CPI data. You can pause your screen and take a good look at this. I'm sure you're probably already well aware of it by now. We were live at the time as we did it and I had a blast, so I think going forward I might continue to do the lives during the CPI data releases. But the too long didn't read is CPI appears, at least for this one print, to be continuing on its path to disinflation. So that's really good. I often say it's not about being right or wrong, but I would be lying a little bit if I said it didn't feel good to see that I don't have to come up with a new idea and that we are still operating as expected. It is also hard enough coming up with a base case and sticking to it and being as objective as possible whilst allowing a little bit of wiggle room for counter trend wobbles in the data. But having now had a YouTube channel and a Twitter account and having to do all of that in the face of people saying, you're wrong, sticky inflation the whole time, does indeed make it quite a lot more difficult to remain objective and get rid of the emotions. But either way, so far so good. We're continuing to see disinflation, which again was not consensus, it was not expected. So overall, I prefer to be against the herd. I believe that is where we are with this idea of continued disinflation. Interestingly enough, core CPI excluding shelter, which remember is the biggest laggard component in the basket, we are currently in deflation already when we exclude shelter, okay? We're already, let me say that again, we are currently in deflation month over month already, 1 year sitting sub 2%. And the Fed funds rate is currently sitting at the 5.375% with a yield curve inversion rivaling the end of that long-term 1929 top. Meanwhile, they keep talking tough and pushing these rate cuts out. I'm going to discuss these rate cuts and the Fed and what the Fed says in just a minute. But just think about this for 1 minute, okay? They're saying things like they don't want to cut too soon, right? But it's already too late. It's already too late. The damage is already done. So we're going to talk about this. But do indeed ponder this for a moment. As of yesterday, the Fed came out and indeed held rates paused. So that was more or less to be expected. I wasn't calling for cuts, obviously, immediately. But what I am still expecting to see is cuts way sooner than the Fed would have everyone believe. So yesterday, Powell came out in his purple tie. Of course, purple tie means we pump. Blue or grey tends to mean we go down. This is kind of facetious, right? It's kind of a joke. It's a meme. But, you know, if you know, you know. And really what I mean by this is a lot of people have to hang on the words that this guy says as if what he says carries any weight at all, as if what he says has any credibility, whilst seemingly missing the bigger picture. Okay, so I had a number of things I wanted to touch on here. First of all, remember, if you're the kind of person that hears what they want to hear, that is by design. Okay, this guy comes out and delivers both ends of the spectrum in the same one speech. On the one hand, he will say something along the lines of, we're not intending to cut at all this year, maybe one cut. We're thinking about cutting once at the most at the end of this year. And then just moments later, this guy will say something completely opposing this view. He'll say something along the lines of, well, we're going to be data dependent. If the labour market keeps deteriorating, if inflation is coming down towards 2 or sub 2%, then we're willing to cut almost immediately. So the whole idea of these talks, in my humble opinion, is for him to give everyone with the selective hearing the chance to hear what they want to hear. Like I said, he covers both ends of the extreme. So if you're the sort of person that wants to hear, there's only going to be one more rate cut, no rate cuts anytime soon, well, he said that. And if you're the type of person that wants to hear, well, we're going to be seeing rate cuts as soon as the data supports it, well, he said that too, and everything in the middle. I know the temptation is to give this man credibility and act like his words carry some weight, but in my humble opinion, they do not. Keep in mind, this is the same guy that told everyone inflation was transitory, only for inflation to creep up for something like 12, 13, 14 consecutive prints until eventually we reached a 20-odd% peak, whilst they sat there and pretended like the real world number was 9%. This is also a man that promised the world they had no intention of hiking rates, only to come out 2 weeks later and embark on the most aggressive, the most fastest rate hiking cycle humanity has ever seen. Not to mention, and I know this wasn't him particularly, but his colleagues stood in front of the world a couple of years ago when we entered a technical recession defined by 2 consecutive quarters of negative GDP growth. She stood in front of the world and said, that's not the definition, right? So giving your energy to this kind of thing, tuning in, watching the speak, listening to what he says, hearing what you want to hear, is in my opinion a complete waste of time. And that is why I always just say, let's focus on the colour of his tie. Because obviously, if it's purple, that does not mean I enter max long across the board. And if it's blue, I don't enter max short across the board. But it is a beautiful symbolism here, because that is the best you can hope for. What colour is his tie? Nothing else can be determined as fact or fiction. Everything else is just saying both sides of the coin so that the people with selective hearing can hear, and also so that the people that live in a fear state and respond well to panic can hear the things that they are scared of. If you, for example, are worried they're not going to cut rates soon, well, he told you that. He's not going to cut rates. Now you can panic. Oh my gosh, he's not going to cut rates anytime soon. Equally, if you're panicking that rate cuts might just be weeks away, well, he told you. If the labour market keeps deteriorating, okay, and they go data dependent and CPI continues to come off, well, he's going to cut sooner than people are anticipating. So that is why I'm so sort of flippant and dismissive, and I only ever focus on the tie, because I believe the tie has more power than the words this man speaks. A bunch of people were tagging me in this as well, so I thought we'd cover this. Could the Fed cut with the stocks at all-time high? Well, they've done it, and 20 out of 20 times, the market was higher 12 months later. So does that mean that this time around, cuts are going to be bullish and they're not going to be bearish? Does that mean that we're not going to see a top come in for the stock market? I would make the argument that is absolutely not the case, okay? These are cuts into normalization. What we have today are going to be cuts as a response to financially stressed conditions. Okay, the banks are currently sat on massive unrealized losses as a result of the bonds. And at the moment, they're getting away with it simply because they're marking them, or pricing them, I should say, as a held to maturity basis. But all it would take is capital flight from the banks, and they would be forced to sell these things mark to market. They'd be forced to reveal the unrealized losses they're sat on. And suddenly everyone will realize the banks don't have your money. Not to mention, Europe, Canada, as we know, all these other places have been cutting their interest rates. The ECB even cited financially stressed conditions as a reason why they needed to cut now. These are not cuts into normalization like what we see here. What we are experiencing at the moment is over-tightening and being late to react to the financially stressed conditions. I think that's deliberate. I don't think they're that incompetent. I think it really is a controlled demolition, and that controlled demolition will probably be used to usher in CBDCs at some point. That's a conversation for another day. But don't look at this and say, well, look, Camel, they can cut and we'll just keep going up forever, like Raoul Paul suggests. I really don't think that's the case. These are cuts into normalization. What we're about to see is cuts because something breaks, okay, because they've over-tightened and because the situation is really bad. Here's another example, right? Unemployment currently sits at 4% in the US. That was their target for the end of this year, and it's only June and we're already at that target. If the labour market keeps deteriorating, what do you think they're going to do? Keep holding rates as high as they are? Do you think they're just going to keep this rhetoric of only one cut this year at the end of the year, maybe another cut in Q1 of next year? No way. No way. If once we get above 6% unemployment, guaranteed immediate 1 to 1.5% rate cuts. That's how it works. So I suggest to you that this is comparing apples to oranges. And I know a bunch of people are going to come back at this and say, well, didn't you see non-farm payroll, right? The jobs look okay. Even yesterday, Powell has admitted to overstating the jobs, right? He even said that yesterday. Everyone knows that they keep releasing the data only to quietly revise it a couple of weeks later to the downside. The jobs are not getting better. That 4% is going to be significantly higher by the end of the year, particularly if they don't start to cut interest rates. And with unemployment creeping up, is that a cut into normalization? No. Or is that something breaking? Is that forcing the consumer to not be able to service its debt, to lose its job? And thus are we having to cut to try to stop the damage? This is not comparable in my humble opinion. As I said, these jobs are going to keep getting worse, and they just keep overstating the jobs numbers as well. They keep lying to us right in front of our eyes. So again, I suggest that rather than hang on what's said at the meeting, we focus on what's happening right before our very eyes. Okay, we can see deterioration in the labour market every month. We can see continuation of disinflation before ultimately what will probably culminate in asset price deflation. We can see other central banks all around the world already cutting rates, citing financially stressed conditions. We can see insolvent banks everywhere that are simply a bank run away from being revealed to be completely insolvent and needing huge bailouts. We do not typically see the likes of the ECB, Canada, Sweden, Switzerland, Hungary, the Czech Republic, so on and so forth, all cut rates whilst the Fed remains higher for longer whilst the Fed continues to hike. We don't typically see that. Typically, a few go first and then the rest go. And it even says down here, you've got to cut soon because otherwise we're going to have a higher dollar price. And guess what a higher dollar price speaks to? Tighter financial conditions, and worse than that, even deflationary bust territory. And fitting in with this theme of looking at what is happening right in front of our eyes rather than listening to a meeting which contains both sides of the argument, for those with selective hearing, we can see we are setting up for another rollover, okay, in the 3-month yield minus the 30-year Treasury yield, okay? These credit spreads are just a few prints away from signalling majorly stressed financial conditions. At the same time, this new catchphrase of mine, tell that to the bond market, okay? This is the 2-year yield, and as we were looking at yesterday in the live stream, at the hard right edge, it is thinking about breaking down, okay? Now, needless to say, the tough talk from Powell yesterday stopped this thing immediately breaking down. But make no mistake about it, unless this thing recovers all the way up here, breaks out and goes, okay, then cuts are coming. And we know that because, again, I say tell that to the bond market. Every time the 2-year yield leads lower, so does the Fed funds rate. And then we get financially stressed conditions, just like the C19 period, just like the GFC, just like 2008, okay? These are not cuts into normalization, and they result in major downside for the stock market and for risk assets. I don't think this time is different personally. Again, we know our invalidation, as I said, break out of here. And suddenly we've got invalidation. Suddenly the bond yield is no longer calling the Fed bluff. But start to get a true breakdown from here, okay? And it is what it is, okay? Data is the data. The facts are the facts. What people think, what he says, how much people believe him, doesn't mean anything, okay? Tell it to the bond market. And another really significant point here, and again, using our eyes to just witness what is happening, observe what is happening right in front of us. We've got asset managers reducing exposure massively to the stock market right before CPI. Again, being wrong-footed, again, speaking to them needing to chase this move higher. All of this is occurring on a fear and greed index right around fear to neutral, okay? As the market is printing new all-time highs, as the market is thinking about setting and confirming third and final blow-off top angles, here we are, with a massive wall of worry to climb, okay? This doesn't look anything like a top. Top's top in this neighborhood. Meanwhile, the stock market looks like this, okay? First, second, third angle, looking for that blow-off top, looking for that parabola, and then we're probably going to see cuts in the not too distant future. This is all happening right in front of our eyes. And all we really have to do is take the emotion out, take the narrative out, stop reading headlines, and start to ask ourselves the question, if this third angle continues to hold and confirm, okay, is it reasonable to expect only one cut this year, no breakdown, okay, no end of the parabolic blow-off top, no more disinflation, no more rate cuts? I don't think that's reasonable. I think by the time we get up here, people will be saying, you know what, this has gone parabolic. This is way, way, way overcooked. We need to have a significant correction. Everyone's familiar with how ridiculous the Nvidia chart looks, but this is Apple. Okay, Apple in the last 2 sessions added $380 billion in market cap. This is end of cycle stuff. This is blow off top stuff. This looks like a data error. Okay, it's a whole Bollinger Band width, top to bottom, maybe more above the upper Bollinger Band. I mean, this is probably getting on for 2.5 standard deviations, right? Maybe more. It might be 3 standard deviations above price. This is end of cycle stuff. This is end of cycle stuff. It is what it is. And the whole time, we've still got all these top callers. We've still got asset managers doubting it, which means there's more fuel for the upside. But eventually, we probably are going to get to a point where everyone capitulates, everyone becomes bullish, everyone becomes greedy, new paradigm, Raoul Paul's up-only cycle forever. And then, of course, you know what comes next. So as ever, we continue to take it one day at a time. We continue to accept that the only thing I know is that I don't know. We continue to try to be as objective as possible, to have a base case hypothesis in which we can work. And we continue to check in on it and wait for it to invalidate. All the while it doesn't invalidate, we continue to remain long and strong and see what the market can give. But it is hard for me to get away from the fact it looks like we are thinking about setting a third and final angle. I want to give this a little bit of space to build some structure out before I truly commit to this third and final angle. I'm not sure if that's it. I mean, it could be. It could certainly be. But I wonder if we've got to come back and backfill this gap, maybe have some kind of puke and shake out before we go. Either way, playing patient, keeping an eye on it, but if it continues to respect this level, then that is indeed the third and final angle right there. I would say this looks slightly too vertical for my liking on the NASDAQ. And again, I probably want to get a little bit more price structure built out before we fully commit to this third and final angle, but it's looking exactly how we'd expect it to look so far at least. The Dow Jones is the only one not playing ball. it looks much more like I'd expect to see into a cycle low. So again, I think we're probably going to get that soon, or if not, we might get a breakout retest resumption. Either way, a few more days of price action and we should have a pretty confident read on the market. Notice how the Russell 2K right into support, now looking to progress to the upside. Again, still expecting breadth to widen here as these asset managers are forced to capitulate and chase this thing higher. Gold behaved exactly as expected so far, as you can see. Little FOMC fake out. The weekly cycle is down until mid to late July, and that's when I'll be looking to get me and some members into some positions back again down in this neighborhood. Until then, no real excitement expected out of the gold market for any significant period of time. Bitcoin also struggling, still range bound, still boring. Bulls are wrong, bears are wrong, but it's probably going to reveal itself in the not too distant future. I see a scenario where we do have to find another cycle low first. If that happens with a blow off top, as you know, I'm not super confident that we're going to see a decoupling. So I think this really needs to get going and get going soon if that's going to be the case. But for now, all the while we're sideways, there's no point trying to draw any conclusions. Just let the market prove what it wants to do and take it from there. And the DXY, as you can see, breaking down, still trying to lose support, daily cycle low in focus, and then we're going to find out, right? Fail that daily cycle and it opens up that collapse down into the 3-year cycle low, comes swinging out of here though, and it puts that whole deflationary bust dollar milkshake idea back on the table. Overall, things are going the right way. The weekend's deep dive will be interesting. We'll be able to come back there and breathe a little bit of a sigh of relief on Saturday, since we are finally seeing the expected direction of the inflation data and the resumption of disinflation. So that is good. Like I said earlier, I don't believe the Fed's tough talk. I believe that's their job, okay, to talk tough, to create the illusion that things are going okay and they don't want to rush. But the reality is there is no rush. They're already too late. And as ever, it's the same old, right? The people that say inflation is sticky, they don't have a data set and a reason to explain this away. They just read headlines and they say, well, it has to be sticky because that's what everyone keeps saying. Same for no rate cuts, right? Well, there's no way they're going to cut at July's meeting, and there's no way you're going to get your stock market to top early because I read it somewhere, because I saw it on Twitter, because I don't want to believe that there's only a few more weeks of bull market left, right? So as ever, just be open to every possible outcome. I am open to being invalidated. I am hoping to be invalidated. But if it doesn't happen, okay, then I have to get short, exit the market, and see what happens from there. I'm your boy Camel. I hope you're doing well in life. And until next time, take care from me. All the best. Cheers. Bye.
Ask your partner to consider your privacy. Just don't mention